what's driving it, I think, what you just mentioned, what's driving it is that what I call ordinary investors, not necessarily retail, but ordinary investors are finally moving into gold, the gold asset class. And, just to step back for a second, remember, we all know why gold has moved over the last 3 years.
Adrian Day Asset Management. How are you, my friend?
I'm fine, thank you, Andy. How are you?
I'm doing fantastic. It's been way too long since I last spoke with you. It's been several months. Great to have you on again here. And over those several months, I want to say it was since January, we have had quite the move in gold first. And now it looks like silver is screaming. It's playing a bit of catch up. What are your thoughts? What's driving this? Do we have more room to go?
Yeah, well, to answer the last question first, yes, I think we definitely have more room to go. I don't use baseball analogies. I use cricket analogies. So, it's like the third batsman just came in, and that's the third out of 11. And it's the first innings, and we have a second innings as well. So we're early in this game is what I think. So what's driving it, I think, what you just mentioned, what's driving it is that what I call ordinary investors, not necessarily retail, but ordinary investors are finally moving into gold, the gold asset class. And, just to step back for a second, remember, we all know why gold has moved over the last 3 years. It's because central banks are buying gold because of a dollar weaponization. There's Chinese people buying gold. That's the second largest buying, non-official Chinese, because of concern about a devaluation or wanting to protect their assets and so on. But all of the buyers that we've had so far, and then you've had wealthy families and individuals in the Middle East and Asia, as well as Europe, and to some extent in North America buying. But all of these buyers are not concerned with the normal economic factors that drive gold. Namely, if you look back over the last 3 years, I think the narrative, we can argue about how accurate, but the narrative is a strong economy, high interest rates, low and declining inflation, a reasonably strong dollar. I mean, that's precisely the wrong environment to be investing in gold. We're beginning to see that turn, increasingly. The narrative is looking at a slowing economy. Some people are blaming tariffs, but I think it's much more than tariffs. And the dollar has been a little bit weak. And so the economic environment that causes ordinary people to turn to gold is actually beginning to turn in gold's favor. And so I think what we've seen this year, but particularly the last 2 months, really since mid-April, let's say, has been a slow, and it is a slow, but an incipient return to gold by ordinary investors. And that's why we're seeing the GDX outperform the GDXJ outperform the GDX, why we're seeing silver outperforming gold. These are kind of and why we're seeing stocks generally well outperform gold and bullion. And of course, last year, that wasn't the case. Last year, gold and gold stocks were basically the same. There wasn't a leverage. So those three things, gold stocks outperforming gold, silver stocks outperforming silver, silver outperforming gold, and juniors outperforming seniors, they're all indications and reflections of retail, but also other investors moving into gold. And it's just beginning. And that's why I say we're very, very early on.
Yeah. Why do you say it's just beginning? Work that out for our listeners and our viewers here.
Well, if you go back 6 months, for example, or go back to the beginning of this year, well, for most of this year, let's say, up until the middle of May, the GDX had net outflows. The GDX had only 3 days this year until the middle of May, only 3 days of net inflows, and they were small. They were tiny. I gave a speech last week and I put the graph up and I said, can you see the three green dots, three green bars where there's positive inflows? And people are squinting and squinting. I said, I'll blow it up for you if you like, but believe me, there's 3 days in there where there's inflows. You could hardly see them. There was a total of 2.3 billion of that net outflows from the GDX. There was not a single day of net inflows into the GDXJ. Funds, mutual funds, I can't give specifics on our fund, but mutual funds in general, gold mutual funds in general, and let's just say ours was so different. We're getting outflows and a few inflows. Coin dealers, for example, even 2 months ago, you talk to coin dealers and they say, oh, we're really busy. 70% of the calls were people calling to sell, not to buy. And so all of those things say to me, retail was just not interested in this sector. It was someone other than retail buying the stocks.
I would absolutely agree with you in everything you said. And I appreciate that you gave some evidence, if you would, by using the outflow with the GDX and the GDXJ. I only know anecdotally here, and I'm here in Atlanta, and I go to investment luncheons every week. And there's just so much more interest now in gold, silver, and specifically now the stocks, which even if you go back 6 months ago, it wasn't the case, but now it is. There's a buzz.
Yeah, no, absolutely. No, you're absolutely right. And now, so typically, someone who's interested in the gold space might say, I want to buy Barrick because it's the cheapest. Someone else will say, I want to buy Agnico because it's the best. Someone else will say, I want to buy Kinross because it's the most leveraged. So they're buying individual stocks and then they're moving down the food chain as well. But the mythical dentist in Duluth or wherever, who says, I think I should own some gold. And he calls his broker, if people still call brokers, that they do. Good luck trying to call the broker if you use IB. But anyway, if he's using a broker or an IRA, a registered investment advisor, he calls, says, I think we should have some gold. And the guy he's calling at the other end doesn't have a clue. He doesn't have a tip. He's heard of Barrick and Newmont, but he can't tell you a thing about Kinross or Goldfields or Anglo. And so what does he do? He buys the GDX. That's the easiest thing to do. He either buys Newmont or Barrick or he buys the GDX. And so that's why we're beginning to see interest in the GDX, whereas 6 months ago, it wasn't interest in the GDX. It was people who knew gold stocks, whether it's retail who know gold stocks or whether it's Bill Druckenmiller who decides which stock he's going to buy. He doesn't buy the GDX. Or Ray Dalio. Can you imagine Ray Dalio buying the GDX? So they're buying individual stocks. So individual stocks were moving up without any influence into the GDX. The fact that that's flipped tells me that, RIAs, if a regular RIA says, I really think we ought to put 1 or 2% of clients into gold, what does he do? He just presses a button for GDX.
Yeah. Well said and well thought out of. Speaking of this now, how are you telling your clients how to position for this if they don't have anything right now? What are you looking for? Are you looking for some entry points or are you just evaluating companies on their fundamentals?
Yeah, well, of course, we don't as we tell clients, we manage the money under a full.
Got it. Right.
If we get a new account, meaning they have no gold, and when we talk to the person, they might have a little bit, typically a person might have a little bit of bullion, but nothing in the way of gold stocks. We will definitely buy gold stocks. I definitely want to avoid the potential error, certainly the risk, even if it turns out not to be an error, but the risk of only buying juniors and exploration at this point because the seniors are too expensive. So you wind up with a portfolio that's all high-risk stocks, and if you're wrong, it's a disaster. So we want to avoid that. So we're definitely buying some of the better large cap stocks as a foundation. Some of the mid tier, definitely. and then also some of the exploration and juniors. I mean, everything's run up, right? So again, it's a mistake in this kind of environment to only buy the things that haven't run up, because there might be a good reason they haven't run up. So, yeah, I mean, we're basically buying across the board: the big cap miners, the big cap royalties, the junior royalties, the exploration. Yeah, we're buying across the space.
Just buy high quality names.
Absolutely, absolutely. So, I mean, my focus is if we're wrong and gold collapses and things turn wrong, we're going to lose money, no question. But I don't want to have 70 and 80% declines. I don't want to have companies that run out of money and have to, raise money at fire sale prices. And basically you want high quality companies, so the companies will survive. And you've got high quality companies at the top end, like Franco, or frankly at the bottom end, that's not,
Yeah.
they don't like me saying that, but smaller companies like Origin. I mean, they're both very solid, very well run, low risk. But one's much larger than the other, of course.
Right. Yeah. Well said. What kind of, when you're evaluating a company, do you look at the market cap or do you also look at, you mentioned money, you don't want them to run out of money. How much money do you like them to have in the bank?
Well, it all depends on what the business plan is, of course. If it's a Franco, or Wheaton, they've got stacks of money, but they don't really need it.
Right.
So if it's an exploration company or a company with no revenue, let's say, I definitely like to see 18 months of runway ahead. What's important to me is they either have cash, they have cash flow, and some juniors have cash flow, like Mondoro or like Origin that I just mentioned. So they either have cash or they have cash flow, or they're the type of company that is going to be able to finance if they need to. So that's a company with a good share register, with supportive shareholders. If you see a company with Pierre Lassonde on the register at 9%, well, you may not see him on the register because it's under 10. But if you know people like Pierre Lassonde or uh, Adrian Day, for that matter, we're going to be supportive of the companies, but we are. Our job is not to help companies, of course. Our job is to do the best for shareholders. But nonetheless, we invest in companies where we're willing and happy to provide capital if capital is needed.
Right. Good answer. So speaking of stocks, let's talk about a few stocks. I want to ask you about one, and if you don't mind name dropping a couple of others that you really like and why investors should look at them. One of the companies I really like, and just for all of our listeners and viewers out there, they are a sponsor of my website, naturalresourcestocks.net, and I am also a shareholder. I'm also an investor. I love the company Helio Star. What is your opinion on Helio Star?
I was waiting for you to drop the name because after that build-up, I didn't want to say nah. No, Helio Star is a very, very good company. Charles Funk, the CEO, is one of the best. I mean, he's absolutely one of the best exploration and developer CEOs in this business. Uh, I admire him tremendously. The job he's done. What he's done with Helio Star is really incredible. Rather than go out and just keep raising money and diluting, he has, in a very, very low dilutive way, he has managed to get two mines into production. Well, one's sort of in production, if you know what I mean. I think you know what I mean. But Anapola is not really in production yet, but they are producing ounces as they do the down slow. And he's managed to do that in a very non-dilutive manner, relatively non-dilutive, and done it in Mexico. And in fact, their main mine is in Guerrero, which everybody says is the worst possible place in Mexico to be. So I think he's done a really superb job getting that company up and running. In 3 years, maybe 4 years, they should have 3 or even 4 mines up and running producing. So yeah, that's one that I'm very keen on. In fact, the price, let me just look at this, about $1.30, I think, today, because it's come back a little bit. It had a good run and then it's had a really good run, but yeah, it ran up to about $1.43. Now it's at $1.30. $1.30, I think we were buying it today. I should disclose that. So I think $1.30 is a very good price for this company.
Yeah, I really like that they have a war chest of cash. Again, we're talking about money in the bank, which they have a lot of, and they're putting it into the mine, if you would, to produce more cash. And it's almost, well, I don't want to say it's almost, it's like he's running it as a business here. We want to get the cash flow, so
Yeah,
we can further the shareholder value, if you would, whether through acquisitions of new properties or through drilling. So yeah,
correct.
so I really appreciate that with.
And it's not exactly bootstrapping, that gets the wrong connotation. But rather than go out and raise 100 million and build the mine, over 3 years, he's kind of taken it step at a time, which I think was the right way to do because again, it was non-dilutive.
Yeah. So who else do you like in this space? Any other names, a couple more names you want to drop for our listeners and viewers?
Well, yeah. I mean, Agnico is clearly the best of the big miners, and everybody says that, but it clearly is. It's a superb, well-run company, low political risk, of course. Um, is it cheap? It's not super cheap. Is it overvalued? No. You look at Agnico on a price to cash flow, it's trading in like the lowest 20 percentile of its historic price to cash flow multiple. And when gold moves up, typically you get multiple expansion. We haven't seen multiple expansion yet in these stocks. That's another reason why I say we're really early. We're really early in the gold stock story. We haven't seen the multiple expansion at all. A stock like Agnico trading on the slowest 20% of valuations. A stock like Barrick, of course, has political risk, but the political risk is reflected in its NAV, right? I mean, if you're in Canada, the same mine in Canada has a higher NAV than the same mine in Pakistan. So it's reflected in the NAV. They're trading in the lowest decile of their price to cash flow in their entire history, which I would argue doesn't make sense.
Yeah.
When prices are where they are. So, and I would still buy Franco, as I mentioned. Franco is a superb company, solid balance sheet, revenue from over 100 sources, including oil and gas, but over 100 sources of revenue, and about 350 non-producing assets in the pipeline, not all of which will ever come into production, but they're in the pipeline. And the beauty, of course, is that any of those that do come into production, Franco doesn't have to pay another penny to get them there. And of course, they have the Cobre Panama mine, which was 19% of their revenue before it was shut by the Panamanian government. That was their largest single asset. When that comes back, it will come back. When it comes back, Franco will resume its stream payments again without having to pay the $12 million a month for care and maintenance on the mine, without having to make concessions to the government to get it restarted, etc., etc. So I like that one. I know you want something a little further down the food chain. I like Orion, AU. That's the company in Finland. They're doing really good work on their exploration program anyway. Good team, really good people. So they've had some really good exploration success. But the short-term key is they have a joint venture with B2, which B2 has now sort of stepped away from, although they still own it, which is adjacent to Rupert's Hickory. And everybody says that Rupert needs part of that ground, part of a joint venture ground for a layback for their mine, which the mine is, they've already done a feasibility and they're already in the permitting. So they need that ground for a layback. B2 actually sold their interest to, or agreed to sell their interest to Rupert a year ago, but the deal wasn't closed. But they forgot, it seems, that they also needed Rupert's Orion's agreement, right? And so what Orion has is a very, very valuable piece of ground. At some point, I think Rupert is just going to have to buy it. They're going ahead with permitting without it, which I think is foolish, because if in a few months they buy that, they're going to have to redo their mine plan, redo their feasibility study, and redo their permit applications. So, but hey, it is what it is without going into too much detail. But I think that's a good one. I would call it a relatively low near-term upside, but a relatively certain near-term upside with, you can't say no risk, but with very, very low risk. There's lots I like. I mean, Alberni in particular, but I like Dakota, that's Bob Quartermain's company in Dakota, believe it or not. Bringing back the home state mine and exploring around it. I think they're doing a super job. And being in the US, of course, they're going to get expedited permitting. Uh,
I think that's enough.
yeah.
Let's comment a little bit about, and we'll end with this. We're starting to see a rash of takeovers, mergers, and acquisitions. Is that something that you expect moving through the rest of the year?
Oh, yeah, the rest of the year and beyond, definitely. I'm not sure, but we're going to see another mega merger like Newmont buying Newcrest, or before that, Barrick buying Randgold, or even Anglo buying Kirkland. I don't think we're going to necessarily see that kind of thing, because most of the potential buyers are already, they've already made their acquisitions or they've got things on their plate. So I'm not sure we're going to see something like that. But I definitely think we could see two things. One would be a merger of two intermediates or junior producers or developmental companies like Equinox and Calibre, that kind of thing, where you put two companies together and you make a 1 million ounce producer, if they can ever get Greenstone working properly. But I think we're going to see more of that. We're also, I would say, almost definitely going to see interest from seniors in exploration projects. Now, the seniors seem to be backing away a little bit from doing option earnings into particular projects, and they seem to be keener on taking equity stakes, 5 or 10%, 5 or 9.9% in the company, exploration company, but it's always because they like a particular project. It's not because they just like the company. It's a way of getting their foot in the door and a seat at the table on a particular project. But they seem to be preferring that to taking option earnings. So we're definitely, and we've seen a big step up in that recently, frankly, and we're going to see more of that. Some companies more active than others. But again, one of the things to remember is, I was in Quebec last week and I had meetings with several companies, and I mean, it was sort of amusing. Virtually everyone says, well, at some point we're going to be bought. And I mean, Agnico's the obvious person to buy us. Well, I can tell you right now, Agnico's not going to buy them all. And Agnico has enough on their plate to begin with. So, I mean, I think these things, even where you see an obvious takeover candidate, they frequently take longer to come to fruition. I mean, a good example, perhaps, if I could mention another company, might be Probe. And I should say that all these companies that I'm mentioning favorably are
I
companies.
just met with them today.
Oh, you did? Our companies.
Go ahead. Yeah, comment about them.
Well, what I was going to say was they've got, it's very interesting in the Abitibi. They've got, is it 4 or is it 5 deposits? I forget now.
I think it's 4.
It's four, and two of them are joined by road, but two of them aren't joined by road, but they're all relatively close. Now, if Agnico wanted to buy them in order to get the ore and truck the ore to their existing mill 20 or 30 kilometers away, that makes 100% sense. If Kinross wanted to buy them again to truck ore to their existing mill, is it right now, I'm asking the question, is it right now big enough, complete enough, with enough technical studies done on it for an outsider, Centaurus, Oceana, someone new to the area, to come in and take it, because they would have to buy a mill. They would have to build a mill, which obviously makes it more expensive. I don't think we're there yet. I think we're close. They're doing a pre-feas this year and then a full feasibility a year from now. But typically, not always, but with a project like this, I think an outsider's going to wait for at least a pre-feas before they move.
Yeah.
At least a pre-feas.
That was actually one of my questions to them, is really what's going to be the catalyst? And I would say a pre-feas potentially. And then we talked about purchasing a mill and the costs associated with that. But if they get bought out by Agnico, or again, they don't have.
Oh, Eldorado's the other one that's nearby.
Yes, Eldorado. Yeah, exactly.
Eldorado, sorry.
Yeah. So if they get bought out, I don't see them needing a mill, obviously. But yeah, it's an interesting story. They have a lot of gold in the ground, which is interesting.
Yeah. The biggest problem is it's not all in one deposit. But hey, I think that's something that will be overcome. But I mean, typically companies want to see a good, solid pre-feas.
Yeah.
To get a handle on the money, on the finances. But yeah, I mean, a company like that, in my mind, is dangerous to say, but almost certain to be acquired at some point.
Yeah.
It's just a matter of who buys it and when.
Yeah, and how much they want to pay. Adrian, can you give some final thoughts, and people want to reach out to you? How did they do that if they want to invest money with you? How did they do that?
Yeah, the website is adrianday.com. So really quite easy. I don't mind. Oh, my name says Adrian up there, but it's adrianday.com. Yeah.
Yeah. And you take smaller institutional.
Oh, I'm sorry. We are very, very flexible. First of all, we take pretty much any structure. It can be a trust, an offshore trust, a 401k. We'll take any structure, right? That's the first thing. When it comes to minimums, it's interesting because we're a little different from most firms. I think, to be honest, over the years, we've actually been a little too liberal in taking small accounts. But our policy basically is we'll take an account if it really makes sense for the client. Now, it's got to make sense for us as well. I mean, if someone says, here's $2,000, we can't really manage it because we are managers after all. And we have had many prospects in the past, frankly, where I've said, look, you'll be better off buying the Sogen Global Fund and paying whatever the fee is rather than paying me a management fee every quarter.
Right.
But anyway, sorry. So it's where it makes sense for a client. So we've had clients, for example, who've come to us, young clients, that just got a job, just starting out, buying a home, doing this. I've got 20,000. Will you take it? I promise to add money every month. Well, yeah, it makes sense for that person. We can start building a portfolio. But if a 70-year-old comes to us with 10 million in the bank, says, here's 20,000, well, I'll say no.
Yeah, doesn't make a lot of sense.
Because it just doesn't make sense. It's got to make sense for the client.
Yeah. Thank you for saying that. Adrian Day, it's always a pleasure to see you. I will see you in Florida, will I not?
Well, I'll be there.
I will be there as well.
You will?
Excellent. Will. Yeah, we will maybe share a drink or something, and I will interview you in person.
Excellent. Well, that's super. I appreciate that.
Yeah, I appreciate it. Well, put all of the your website and everything, all of the show notes on this YouTube channel, as well as Spotify and Apple Podcasts. I always appreciate talking with you, Adrian.
And you. Thank you, Andy. You're one of the best.
Take care.
Okay, thank you. Bye.